Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 19th of April 2024. First chart, as usual, is the US Dollar Index Futures. And you can see that price broke out last week above this 104 level, which has been the important level to watch for quite some time now. And this week, price has moved into an awkward looking consolidation mode. Normally you'd prefer a consolidation to be just below the previous bar's close. But this bar's closed as an up bar and spent a large proportion of the week as an up bar. I expect this is reflecting a strong market, which has been too strong to move back to consolidate and instead has had to do it adjacent to the previous bar's close. And it may move into some form of bullish absorption like this prior to any attempt to push higher. It can also reflect some selling pressure that's come in. The market's been moved up to sell it. So there is some uncertainty in this bar. I expect this market is showing strength, and it was too strong to consolidate in a more orthodox manner. So it's consolidating as an up bar, which is a little unusual, but more common in a stronger market. But just be aware that that's not confirmed yet, and we're looking for confirmation next week. E-mini S&P, this is S&P 500 index futures, and we've had a market that's been pushing higher for some time now. I mentioned recently this gap up to new highs after a pretty good run higher is always suspicious, and it's often a tactic used to sell a market. And at this point, that appears to be what's happened. Price has broken down below that level this week, although it has closed at a reasonably logical level. This was the level that I would mark on price action. But as you can see, this bar here, the high of this bar which I'm marking, actually corresponds to very low volume. So there was little activity on that bar itself. And this instead is the high activity bar. You can see the volume is much higher on this bar. It's actually the highest volume between this bar and this bar. If you mark it across like this. You do want to mark bars that have high activity on them, because they're where the action took place. And if you draw a line across from there, you'll see the market did actually close at that level. It dipped slightly below and recovered to close at that level. So that's a fairly logical level. It corresponds with the 5,000 level, a psychological level for the market. So that does make sense, and the market has closed at that level. There may be an attempt to consolidate at this level now. A break below it would likely see the market come back to this level here. Next chart is the US Treasury 10-year note futures, and they are showing some attempt to consolidate. You can see on the previous bar, there was an attempt to consolidate here just below the close, and volume was above average, so it was a significant attempt. And this week, spreads narrowed, volumes increased, and the market has tested below the previous bar's low and closed back adjacent to it. So there's an attempt to consolidate at this level here, pretty much adjacent to the 108 level. Because below that, there was a awkward looking breakdown bar, then a complex high above that, or low, depending on how you look at it. So there's an attempt to offer support to the market here, And I call it an attempt at this point because it's not confirmed that it will be successful. And even if it is, it may just push up to this breakdown line here, fail, and move back again. So let's just call it an attempt to support the market at this point and see what comes of it in subsequent trading. Copper price futures really accelerated higher this week. You can see the levels in the background. There was the lows of the range. We noted at the time some accumulation took place in here. Here's the mid-range levels coming through here. Price broke out on this bar, went through a consolidation period, broke out a second time, and there was a larger consolidation here on this bar here, or absorption, which was probably the market absorbing any supply drawn out from these highs in here. And prices really accelerated higher again this week. Volume was reduced, spread was increased, so selling pressure was low in the market. That allowed price to really push higher. It's possibly even a little excessive. I'd have to expect a period of consolidation in response. Generally, when momentum begins to ease, that's likely to be next week. And the higher in the range this can take place, the range being from the previous breakout up like this, so it forms like a bull flag. And the higher up in the range the market is able to successfully consolidate, the stronger the market is, relatively stronger. So watch what happens in response. I expect a consolidation will take place pretty quickly, because whenever a market makes a lot of ground higher in a relatively short period of time, supply is generally drawn out, and that supply will come from short sellers who believe the market is overextended in this period of time. You'll have profit takers who bought down lower and are taking some profits off the table, and you'll often have supply to the left, although this market really has moved above that. So there's not likely to be much supply to the left. So whenever prices make strong gains in a relatively short period of time, supply is generally drawn out. That supply will need to be absorbed, and that generally takes place in a period of consolidation. And the higher up in the range the consolidation can take place, the stronger the market is. So keep your eye on the response next week. Gold price futures. Gold price futures have been a good chart to follow for a while now. Makes good sense. We had a 3-bar reversal here and a breakout above it. An attempt to break out. We had this awkward looking bar, which probably should be discounted in my opinion. If you want to learn more about that bar or how I treated that bar, I've got a whole video on it you can watch. We noted here there was strong buying support and a shakeout in response, and the market then broke out above that level, went through a little period of consolidation through here. It's broken out again. Supply was drawn out last week. The market did test for supply in response to that. Obviously found low volume because prices pushed up in response. And I say low volume, it's relatively low volume. And you can see that by the volume being lower this week. It's probably lower because the market did come back and test for supply early in the week. It didn't find a huge amount of supply being drawn out, and that allowed the market to push higher in response. So this was a good, strong bar. It's probably reduced any fears of supply being drawn out and the market breaking down in response, and it's closed at a logical level around the 2400. So that's all looking okay at the moment. It doesn't look like the market's going to break down. It looks more like the market is absorbing its way higher. Silver price futures, similar to the gold market, although it has been a little more volatile, which it usually is. There was the supply drawn out, similar to last week. There was a test for supply, similar to the gold market. Volume was reduced in response, and that allowed the market to push higher. This market's not always the leader between gold and silver, but it's usually more volatile, and you should always respect it a little more if you're trading this market. Like crude price futures, we noted back here there was some consolidation and absorption, possibly accumulation taking place down here. The price broke out above that and moved into a period of bullish absorption. The next breakdown line comes through here like this. Price accelerated above it and has come back and appears to be testing it for strength. And the market has moved down to this level and just tagged it and has found sufficient strength to close back above it again on an increase in volume. So that's a pretty positive response. Now you have got another level coming through here and the highs of the range coming through there. So I'm expecting some supply at this level. You may find the market trading just around the 85 level, between 81 and 85, just for a little period of consolidation. So you'll have the market trading in here like this, with the highs of the range coming through here around the 85, prior to any real attempt to push higher. Just a little period of consolidation above the 80, 81, below 85. See how much supply is drawn out, because the last 3 weeks have seen pretty high volume drawn out. Markets rarely move higher on a sustained basis when supply continues to be drawn out. There's a lot of activity in this market, just perhaps needs to settle a little bit, absorb some of that supply, get back closer to average volumes. Euro, US dollar currency futures, and the market didn't really trade the inverse of the US dollar this week. If it did, it should have been probably like this and closed as a down bar, but it's closed as an up bar. So it perhaps showed a little more strength than expected. Anyway, here's the important line. Last week saw a breakdown bar, and this week a modest recovery. It's not a clear recovery, and I'm not expecting price to push up and challenge this level again, but it's a little stronger than expected. The next lower level is down here. If the market's unable to recover, it's probably going to move into this level to find support. That's in here, just below the 106. So we'll see how it responds. There may be an attempt to push higher if the US dollar allows it. If the US dollar moves lower to consolidate, this market will be allowed to move higher and probably come up to this level. I doubt that it'll issue any serious challenge to it though. British pound currency futures, they have its level coming through here. Here was last week's breakdown bar. This bar is more like the inverse to the US dollar, although it did close a little more poorly. US dollar would have closed in the middle. Spread did narrow considerably though, and volume was average. So there was definitely an attempt to support the market here. You probably saw that in the euro as well. So there may be a little response higher, and that may be giving you an indication that the US dollar may come back just a little and attempt to consolidate. If the US dollar was expected to accelerate higher from this point, you would have expected this market to trade lower with an increased spread, or at least increased over this week's spread, but it didn't do that. So perhaps there's a telltale sign here in both the euro and the British pound that there's going to be an attempt to consolidate in the US dollar prior to any attempt to move higher. Aussie dollar currency futures, they have their level coming through here. Last week wasn't really a breakdown bar. The adjacent level comes through here like this, pretty much adjacent to the 64 level. Price did move lower this week, but with a slightly exaggerated spread if you were looking for the inverse to the US dollar. It has tested the 64 level and closed just above it. So it may be that the Aussie dollar is going to trade in this range now with the last gasp support coming through here, about 63. So I'm expecting the Aussie dollar to be trading around the 64 level. If the US dollar does come back and consolidate a little next week, price may push up to this 65 level. I doubt there'll be any serious challenge to it though, unless the US dollar really fails and reverses lower. So I don't expect there'll be any serious challenge to the 65, but I expect price could float up to that level on a lack of selling pressure if the US dollar does come back to consolidate next week. Bitcoin futures have been a great chart to watch over many, many weeks, makes good sense, and we can follow it pretty clearly. Here was where we expected supply to be drawn out from the left. Price had to absorb its way in, accelerated higher before pushing out of this zone after a period of consolidation. Price pushed up to the next level. The next level is the secondary breakdown line. There was 1 week of consolidation before price pushed higher again. This is the highs of the range, and this is the all-time highs. Price pushed up to the highs of the range, and then to the all-time highs. And then there's been a period of consolidation in response. Now, I was expecting price may attempt to move higher this week. Instead, price is shaken out. It's shaken out adjacent to this bar, and this bar had that much volume on it. And when there's been a shakeout this week, there's been less supply drawn out. So this may have been a marking time bar. This may have been an attempt to remove supply. Now, often in response to a shakeout, there'll be a test for supply, at least early in response. So an intra-week or daily response of a test for supply. And if supply is actually found to be low, then you may find the market pushes up to the highs of the range again, up towards the 70,000 level. Probably won't break out immediately, possible, but more likely test for supply early. If selling pressure is found to be low, if volume is found to be low as price pulls back, then that will allow the market to push back up again in response. It may just float higher, or it may actually accelerate higher and probably up towards the highs of the range around the 70,000 level. Just back to the US dollar quickly to finish up. Here's the level we'd been looking at for many weeks, and that sort of corresponds with that breakout line there. Price accelerated higher last week. Now you would generally expect a consolidation in response, especially as there is some trading to the left, which will probably contain some supply which needs to be absorbed. Generally, you would expect a down bar to consolidate. Either the market is too strong to pull back to consolidate, or there was a bit of over-enthusiasm in the market and there's been an attempt to consolidate and absorb supply as an up bar. We'll have to wait and see. Those other associated currencies are suggesting this market may consolidate this week after a bit of over-enthusiasm last week. So you may get a bar that looks something like that this week, or at least early in the week, something like that, and then a response depending on how much supply is actually drawn out. But those other markets, the euro, the British pound in particular, suggested this market may move into consolidation this week and look something like that, at least early in the week. And we'll see how much supply is drawn out in response. And then if supply is low, you may get an attempt to push higher, or if supply continues to be drawn out, a deeper pullback in response. It looks more like that. So we'll see. The important level remains at 104. While trading is above 104, this market has a bias towards the upside. Okay, thanks for your time. We'll see you again next week. See ya.